For many people, perception is reality. I have found that many people have a negative perception of private mortgage insurance. Now, I'm not just talking about buyers. Some real estate professionals shared this sentiment too. But why? Is private mortgage insurance a bad thing? I do not think so. And in fact, I believe that private mortgage insurance is a very good thing. Let me say it again. Private mortgage insurance is a good thing. This episode 95 of the Martini Mortgage Podcast, is called PMI, a good thing.
This is the Martini Mortgage Podcast with Kevin Martini.
Welcome to the Martini Mortgage Podcast 95th episode, which is about private mortgage insurance, or most commonly referred to as PMI. Hence, I am calling this episode PMI, a good thing. My name is Kevin Martini, and I'm not just the host of the Martini Mortgage Podcast, but I'm also the branch manager and senior mortgage strategist at the Martini Mortgage Group with Benchmark Mortgage. I have personally been in the financial services since the late 80s, and I have been in the mortgage arena right here in the Triangle of North Carolina since 2006, helping families not just in Raleigh, but all over the great state of North Carolina and the Commonwealth of Virginia. Now, I have found that home buyers, on the aggregate, overestimate the credit score needed to buy a home, and I have found that home buyers, on the aggregate, overestimate the amount of down payment to buy a home. Let me start by talking about the down payment misconception. The perception that a large down payment is needed is a limiting belief that creates an obstacle for people to buy a home. In the population, many have this perception that 20% of the purchase price of a home is needed for down payment to secure a mortgage. This perception creates a detour to the home buying process for many, and it should not. It does not need to. I want to be 100% transparent about something with an open heart. I believe that home ownership creates a path to wealth. It also creates freedom. For many families, saving for a down payment is tough because there's this thing called life. Did you know that the Martini Mortgage Group at Benchmark Mortgage offers low and no down payment home loan options? Let me say this a different way. Today, there are programs available for not just first-time home buyers, but also repeat home buyers that do not require a down payment. Or if a down payment is required, it could be very low and materially less than 20%. With that said, if one can purchase a home with putting less than 20% down, why are they not? Perhaps it's because they simply do not know that they do not need to put 20% down. Or perhaps it's because they believe that private mortgage insurance is a bad thing. So, what is PMI? Simply put, it is an insurance policy to protect the lender if you're unable to pay your mortgage. Private mortgage insurance is required for all Fannie Mae and Freddie Mac loans, which are also known as conventional loans or conforming loans, if you have less than 20% down payment. Here's the killer thing about PMI. It can go away. You heard me correct. It is not there for the life of the loan. Yes, once you have built a 20% equity position in your home, you can cancel your private mortgage insurance. Folks, PMI is not a bad thing. It is what allows one to buy a home without a large down payment. For illustration only, let us compare a $250,000 home with a 3% down payment versus a 20% down payment. With the 3% down payment, the only amount that's needed is $7,500. However, with a 20% down payment, $50,000 is needed. I bet it's easier to get your paws on $7,500 versus $50,000. Again, for illustration only and for discussion only, let's assume the mortgage interest rate of 4%. With the 3% down payment, the principal and interest payment would be $1,157.73 a month. And with the 20% down payment, it would be $954.83. Now, keep top of mind that when you do not put 20% down, you have to pay PMI. Assuming a factor of 0.55, that would add $111.15 a month to the 3% down payment option. So that total payment will be $1,268.88 versus $954.83. Here is a hashtag Kevin Martini Live talking point. Based on the data from the Downtown Raleigh Alliance 2019 State of Downtown Raleigh, Raleigh had 10,877 residents, and the average rent was $1,513 a month. The principal, interest, and PMI for a $250,000 home with just 3% down was $1,268.88. Wow, that is less expensive than the average asking rent in downtown Raleigh. Now, I get it. Putting 20% down saves you a little over $314 a month. However, keep on the radar screen that the $111.15 for the PMI is cancelable after you have a 20% equity position. So really, the 17% or more down payment is only saving you a little bit north of $200 at a principal and interest level. In the Martini family, I rather pay $202.90 more a month and keep $42,500 in my wallet. But that's just me. Let me share a second hashtag Kevin Martini Live talking point. Let's assume you can save $420 a month for a down payment. That means it will basically take you 10 years to come up with $50,000. However, if you save $420 a month, you could save a 3% down payment in less than a year and a half. I said it earlier, and I want to say it again. I believe that real estate creates wealth. And I'm reminded by a quote by Andrew Carnegie that he said it way back when, and it was relevant then, and it's relevant today. He said, and I quote, 90% of all millionaires become millionaires through real estate, end quote. It is critical that I point out that there are opportunity costs associated with waiting to save for a larger down payment since home prices could be more expensive in the future. I'll talk about that in a moment. Fannie Mae, Freddie Mac, the Mortgage Bankers Association, and the National Association of Realtors all believe that mortgage interest rates will shift higher than they are today. While you wait, the rules to get a mortgage could be tougher too. At the time of this recording, mortgage rates are epic. Remember, when mortgage rates move upward by just 1%, that reduces your buying power by 10%. So the current historic mortgage rate environment allows one to amplify their buying power. I truly believe The flexible down payment option that myself and my fellow mortgage strategist Logan Martini offer here at the Martini Mortgage Group at Benchmark Mortgage enables one to buy now and begin building wealth versus waiting 5 or 10 years to save enough for a 20% down payment. Now, I said I would talk about home values, so let me now. There is something called the Home Price Expectation Survey. This is published by Pulsenomics, and it's over 100 folks that are deemed to be experts in forecasting in the real estate arena. I personally believe the opinion of these is better than just one source. Here is the punchline of the report. There are some folks in the survey that see the glass half empty, and there are some folks in the survey that see the glass half full. The pessimistic folks project that the cumulative value change versus the year ending 2019, home values over the next 5 years cumulatively will appreciate at 7.8%. Yes, the bears of the housing market still believe that home values will increase over the next 5 years. The bulls of the survey, or the folks that are optimistic, believe that the projected cumulative value change over the next 5 years versus the end of 2019 will be up 31.2%. If you look at the median of all that were surveyed, they believe over the next 5 years, home values will rise cumulatively at 19%. Now, there's no way for me to sugarcoat the fact that PMI is an added cost. However, the added cost is worth it if you consider there's a cost of waiting to buy, since home values are projected to increase, and so are mortgage rates expected to increase. Folks that are pessimistic believe that home values are going to go up too. So it's my opinion. The cost of PMI outweighs the potential appreciation. Oh, by the way, the cost is less than renting in the example that I shared earlier. PMI is a good thing. Let me say it again. PMI is a good thing because PMI allows one to buy a home with less than 20% down. PMI is cancelable with a conventional loan program, and there are special programs that may not even have PMI requirements that we offer. Should you and your family buy a home? I do not know, but what I do know, it's wrong for you not to explore your options. If you have questions about whether you should buy now or wait until you have a larger down payment, give me, Senior Mortgage Strategist Kevin Martini, a call, or call my business partner, fellow mortgage strategist and son, Logan Martini, a call. Our number is 919-238-4934. Oh, by the way, if you're a prospective buyer who's ready and willing to act, but unsure if you're able, let us meet so we can help you understand your true options today. Again, our number is 919-238-4934. At the end of the day, don't let one's perception of PMI be a limiting belief for you and your family. Explore your options and develop a plan. In closing, remember this. It does not matter how big the house is. It matters how happy the home is. Thank you for listening to episode 95 of the Martini Mortgage Podcast. Check me out on the Instagram at Kevin Martini Live. And stay tuned for more episodes of the Martini Mortgage Podcast that are curated to help you understand the current opportunity.
The Martini Mortgage Group makes real estate dreams a reality with trusted advice in a stress-free environment with great rates and on-time closings while providing a world-class experience. If you or someone you know has questions about the current mortgage rates or the current mortgage programs, please reach out to the Martini Mortgage Group at 919-238-4934. 4934. The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina 27609. Contact the branch by calling 919-238-4934. Equal housing opportunity.